Worldwide markets this week, Alphabet looking cheap, very cheap. Some woeful US economic data just come out. Local CPI, we've got the Berkshire AGM this weekend. Aspen, trust is broken. Budget, take 3, and Trump 100 days. This is Worldwide Markets episode 628 for 30 April. I'm recording this Wednesday afternoon on the 30th because I was waiting for all of that economic data out of the US to break. Worldwide Markets powered by Standard Bank Global Markets and Shift, the global money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest Forex rates. My name is Simon Brown, and thanks to Shift for that. Let's touch on that economic data coming out of the US first and foremost. So there's a lot that came in. The key one perhaps is the GDP first quarter data. Expected was going to be 0.2%. Instead, we got minus 0.3. The Atlanta Fed, which I've been tracking for a fair bit, was actually looking for a lot worse of a number, but nonetheless, it's a bit of a horror show. There are a couple of important nuances here. The first is that imports surged some 40%, and this was companies importing ahead of the tariffs that were coming, that ended up arriving. Liberation Day was 2nd of April, 2 days after the quarter ended, and then of course that was walked back. But important, imports are subtracted from GDP. So that certainly skews the number a bit. But what we do have is a minus 0.3. For me personally, 2 negative quarters in a row is a technical recession. The US has their own department that will decide whether they are or aren't in a recession. But this is a sign of confusion and uncertainty, I suppose. And I'm going to dig into that a little bit more in just a sec. We also had the US PCI up at 1.8 versus a 1.2 expected. That is a very nasty number. The GDP is going to get revised. So the first bit, they call this the advanced estimate, comes out today on the 30th. We get a second estimate May 29, and then the third final estimate on June 26. They kind of rush out that first number. So that negative 0.3, we will see. In time, it'll get nuanced. It might end up a little bit more or less. It's not usually significant changes. But what we are seeing is we saw some data yesterday which kind of confirmed retail inventories higher in March. Good trade balance, 20 billion weaker. Again, showing the imports coming. And this is ahead of the Liberation Day. We're, what are we seeing? My Twitter stream and news articles are full of logistic companies and importers and telling us that the world is going to end in the US, saying that there's no ships coming, that docks in America are on East and West Coast are absolutely got nothing happening. The shelves are going to be empty by, mid-June, July, warning us that Christmas shopping goods are being ordered and manufactured and processed now, and that there's going to be empty shelves and the American government is going to hate it. I don't know. These are reliable people. My Twitter stream is fairly well curated. So these are folks who are in the industry. They've got no real reason to be lying. It would certainly trash their reputation. As I say that, I chuckle to myself. But it does seem that that Trump is in a bind. It's 100 days in office for him today. What's he achieved? Not very much at all, to be perfectly honest. Well, aside, what's he achieved on the upside? Well, he brought back plastic straws. I think that's about it. And then he canned some law more recently that he signed into power in 2018. Whatevers. The point is, where to next? So supposedly we've got those 90 days, which takes us to early July, by which time he would have signed 90 deals. At this point, we're a whole bunch of days in, and there's been no trade deals signed at all. Reports are that there will be one coming shortly from India. Nice, India is not an unimportant market. He is rolling back some of the auto tariff issues. Certainly that will help. There's rumors that he will be giving some support to farmers. Also nice, also be helping. But we're not going to get 90, never mind 30, never mind 150 trade agreements by the time the 90 days is up. What happens then? Does he just leave the 10%? Do we all go back to those crazy numbers? South Africa was on 30%. What about China at 145%? It seems that Trump is keen to talk, but Xi Jinping is like, nah, fam, I'm busy. I don't know, talk to the other hand or something like that. He's kind of backed himself into a corner. And I don't know how, because Trump backing himself into a corner and then making up some nonsense story and claiming victory is just what he does. Those first tariffs way back in early Feb against Mexico and Canada, which he then reversed and said he's got deals out of them, but both of the deals were old things that were just reiterated. They weren't deals Trump had made on that particular tariff news. So I don't know what the play is going to be, but certainly if it continues as it is and let's assume it just stays at current levels and China at 145%, everyone else on 10%. And then obviously there are some bespoke tariffs here, there and everywhere that have been around forever and a day. It's looking bleak out there, particularly seeing as a lot of American stuff comes from China. And whether that be plastic flowers, which apparently is plus 90%, to the mobile phones. Now, Trump can carve out a deal for the mobile phones and say, don't worry about that. Fair enough. But plastic flowers, what about everything else? I mean, that's just it. I don't know how it plays. We will see. It is messy. I am not in any sense suggesting there's victory one way or another, simply because I, just like everyone else out there, simply doesn't know. It's it's the unknown. We've got a bunch of events coming up. We're doing a Meet the Managers series, actively managed certificates. What we want to try and do is meet the managers, understand their philosophy. What are they looking for? What excites them? What's their mandate? What their returns been? Because there's a bunch of these AMCs out there. They're really, really great, but we don't know very much about them. So we're doing it over 3 Thursdays starting next week. It'll be 11:30. They will be recorded. That'll get us through about 9 managers and about 14 or 13 AMCs will be discussed. We've also got on the 15th, which is 2 weeks' time, we are a power hour. Trading is a side hustle. Know your derivatives. We've done a lot about trading. Now let's go look at CFDs, options, futures, all of those sort of things. That is on the 15th at 5:30, either webcast or in person. JustOneLap.com/events for more information and booking. Worldwide. So let's pick up on Alphabet, Google back in the day, but these days, of course, it is called Alphabet. That is how it's better known. They had results that came out last week. There's a bunch I want to talk about. Weirdly, I've just recorded Stockwatch with Gary Boyson, and this was his stock pick, and he's like, this thing is cheap. It is. I mean, PE is under 20. So here's your revenue. Search advertising revenue, 50 billion, up 10%. That is more than half of their total revenue, which is 90 billion. That's $1 billion per day. YouTube is almost 9 billion. AdMob, which is AdSense, is 7.3. Google Play, which includes Fitbit, Nest, Pixel, YouTube Premium and TV up at 10.4, Google Cloud at 12.3, and then other, which is 0.7 billion. That will be Waymo and some of their other moonshots. All in all, a good set of numbers. Net profit comes in at 34.5 billion. R&D is a big expense there. That absolutely makes sense. There's some challenges here, but this is really good looking. And then there's some other charts I want to look at. So this is cloud. Google is probably, I mean, where are they? They're probably number 3 in cloud, AWS, Azure, and then Google Cloud coming through. They did say, Sundar Pichai on the conference call was saying that they are struggling to meet demand, and so they're building data centers. But cloud has been growing very nicely for the last many years and is actually turning operating income positive, which is important. But here's my most fun one, is that US TV time market share, YouTube has more than Netflix, not by a small amount. YouTube is 12% and Netflix is 8%. In other words, they are 50% more. So hidden in all of this is, well, I mean, it's not hidden, it's there, but it's like only 10% of revenue, and that is YouTube. And it is an absolute beast. There are some challenges, and I want to come to some numbers in a moment. There are 2 antitrust cases ongoing. So the cases have been decided. There is now deciding what should be the action thereafter. To be clear, both sides, the Department of Justice and Alphabet, both get to pitch. You will hear the Department of Justice saying that they must divest of Chrome and all of that sort of thing. Google will then, or Alphabet then gets a chance to give their side. And then the judge decides, ultimately. And then Google will appeal. And that appeal, I mean, if you remember the Microsoft case, by the time it finally came down, it was moot because, well, the world had moved on in many senses. So the antitrusts don't stress me very much at all. One thing that does perhaps, I don't know, bother me, worry me, sit on my head is how we search. Google.com has, I think, become a bit of a broken search engine in recent times. It's become so full of adverts and garbage links that really don't do anything. So what am I using for search? Well, I'm using Perplexity, which is built into my browser. I'm using ChatGPT search. They are great. They're absolutely great. And some of you will say, yeah, but it hallucinates. Well, yeah, but so does, I mean, Google.com doesn't directly hallucinate, but it sends you to trash sites and sites that are just, search engine optimized out of the, like crazy, that have got AI created content. The utility of Google.com is I think, weaker than it has been in a very, very long time, is my personal sense. And I still use it. If I want to know, I don't know, campsites around Aspen and Giesel, okay, then I'm going to use Google. But if I want to know when is the US GDP data coming and what are the revision dates, well, then I use Perplexity, which is Anthropic, Claude 3.7, I think, and then I click through to the source. But I get it nice and clean. So Google's trying to respond with their own little AI searches at the top. They're certainly getting better. And Google's been careful with Gemini. I mean, ChatGPT came out towards the end of 2022, so call it 2.5 years ago almost, and Google was caught absolutely flat-footed. And they've been very careful with their rollout. They've still got, I think, a lot there. I don't use Gemini at all. I have played with it. ChatGPT and Anthropic are my preferred. And I tell you what I really like about them, and Google can do this, is it's no longer, I'm trying to do something. I'm trying to, I've got my mixing desk crashes, and I'm trying to work out error messages and stuff like that. Instead of going to Google and searching, or even Anthropic and searching, I do voice prompts with ChatGPT, and I just have a conversation, and I say, this is the error message. And they say, well, try this, try that. And I'm like, okay, tried this happened. And kind of like, it's a much more intuitive and simple process to get what I'm looking for. Now, Google's got Gemini. Google can do that. 2 things. Firstly, with Google.com, or Alphabet's got Gemini. With Google.com, they were streets ahead. I mean, their market share, I think, globally is around 70%. I mean, they're absolutely streets ahead. Whereas with the AIs, and particularly the search AIs, well, there are many of them. There are just many of them. The second point is, how do they wrap the adverts? Now, when I'm on a website and ask a question, sure, you can wrap some adverts there. But when I'm just chatting with it, which is my preferred way to use, how do they wrap it? So, is their search revenue going to vanish? No. Is it going to come under threat? I think maybe. And to be clear, if there is a recession coming in the US and things are getting ugly, we will see less advertising generally. If you're a business in the US and you've been unable to get inventories because of taxes on China, well, then you're not going to be advertising. If you worry that your customers have got no money, you're not going to be advertising. So in the short term, there is some pain there. One of the side bets, which is Waymo, which is their autonomous driving, is absolutely killing it. I mean, it's absolutely, it's insane how efficient it has become. And what we see with that, they're doing 250,000 rides a week. That's up 5x from where they were a year ago. And the key point is, I mean, we will hear lots from Elon Musk and the like saying, this is cool, but we're going to do our own. Waymo's doing it. Waymo's out there doing those trips. The other folks aren't yet doing those trips. They've got a ways to go. But let's look at some of the actual hard data from Google. So we've had some sell-off here. I mean, to be clear, it's back at, if you want to be generous, we can say late 2021. Truthfully, it's back at about April of last year. So it's basically given up a year's worth of gains. But some of these numbers are really, really what impresses the heck out of me. Shares outstanding coming down nicely from 14 billion down to 12. We have a forward PE of around 17 with a 10-year mean PE of around 30, which, I mean, this is about as cheap as I have seen it in the last decade. Price to book, not quite so cheap, sitting at 5.7. The mean there is 5.3, so it's about fair. There is a dividend yield, but a 0.5% dividend yield is hardly exciting. And then if we look at the analysts' estimates and consensus numbers, sorry, I want that one. Their price targets. We've got 13 strong buys, 39 buys, 12 holds. No sells, no strong sells. That always, I'm like, surely someone out there hates this thing. Anyway, the low price target's 160, the share price is 162, average 202, and high 240. Alphabet is a quality tech company. They've basically got 1.5 Netflixes sitting inside there within YouTube. Then they've got their ad business. They've also got Waymo. They've got Gemini. They've got Android, etc., etc. The stock is absolutely cheap, and I think it's a while since we've seen these levels of cheapness. Is it plain sailing? Can tariffs and recessions and everything hurt them? Of course it can. But that doesn't mean that that doesn't make it cheap. And the point is, you want to find things when they are cheap. That's an interesting time and opportunity for picking up. You don't want to buy expensive. You want to buy when it is cheap. So we had some CPI data. Was it last week? I'm pretty sure it was last week that came out. And it was a goodie number, I suppose we could say. It was 2.7%. Remembering that the governor wants 4.5%, that the average target is 3 to 6 is actually it. This also puts it below the October 2.8. It was mostly helped by fuel, and basically we have to go back to June of 2020 to get 2.2%. So, question: rate cuts. So, and I need to look over at my calendar. 7th of May is FOMC and 29th of May is the MPC. FOMC, are they going to cut? It's a tough call. Most folks I'm speaking to says that there's probably going to be base case is 0.75% cuts this year, and one of them probably coming at the May meeting, which means we'll get a cut from our Reserve Bank. If we don't get a cut in the US, our cut might be out the window. And frankly, they are hawkish. It is ingrained into their DNA. We could do a 0.5% cut, absolutely no problem, but it's just not happening at this particular point. Speaking of that, we've also got budget 3.0 because, of course, the tax got nixed, or the VAT increase. So the next budget will be tabled on the 21st of May. That is what I think we call very, very messy, however you want to take it. Aspen. So I was recording last week while they were doing their presentation to analysts. They basically lost a customer who was a take or pay. In other words, we build the stuff, whether you pick it up or not, you pay us for these. And when I say build, they're just filling vials. I mean, but it is a clean facility. I think it was the European one. Adrian Stevensard was vague. He didn't give a lot of details, and I get that he probably can't. I appreciate that there's probably he doesn't want to say anything because he's just not quite sure exactly what is happening. But so that's the wrong Aspen. If we have hold on, let's start from scratch. The stock lost about a third last Wednesday. It has bounced a little bit. It's probably got resistance at about the 128-ish, 126-ish level. The problem with Aspen is it's, I think, losing investor confidence. The facilities that they have are giant. They've spent billions rolling them out, and it's around now utilization. You're utilizing it at say 30 or 40%. You're probably not making much money. If you can get that to 70 or 80%, you start really making money, and you get it to 100%, and you've got yourself a little printing press there. But Stephen Sard has for 2 years now saying things are looking good, things are going in the right direction. We'll get. And then they lose a contract. And the question is, why did they lose it? I mean, has whoever has walked away from this contract got a valid point? It's going to take some time to find out. It's also going to take 12, 18 months to replace them. And that only takes the utilization back to where it was. It doesn't particularly in any way help. So I got to say, I am worried about Aspen. Don't hold it, haven't held it, and certainly wouldn't be holding it. I don't think it is a high quality company. I think it has lost the support, the confidence, and that's massively important. Last thing, we got the Berkshire Hathaway AGM on this Saturday. It will be the second without Charlie Munger. It will just be Warren Buffett. I think it's a 2:30 kickoff on Saturday afternoon. It will be streamed live. You can go to cnbc.com/BRK live, and you also find it on the CNBC channel, YouTube channel. They will be streaming it live. It is long, but it is always well worth it. Warren Buffett is worth every cent to go and listen to his thoughts and what he has to say. Worldwide Markets, powered by Standard Bank Global Markets and Shift, the global money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest Forex rates. Thanks to Standard Bank and Shift for sponsoring this webcast, whatever we're going to call it. My name is Simon. I've got Friday off, everyone, so enjoy the long weekend. If you too also have Friday off, we'll be back next week as per normal. Remember those events, JustOneLap.com/events. Meet the managers, AMCs, as well as the Power Hour on the 15th. Until next week, look after yourself, and if you can, look after somebody else as well. Cheers all.